All right, we have to talk about the CPI yet again. And of course, this month's CPI is a little bit more concerning. So, of course, we have to talk about how the CPI actually went up by 0.6% month over month, which equates to about 3.7% year over year. Okay, I'm going to be going through the CPI pretty quickly, and afterwards we have to talk about what's happening around the world, because all the central banks are doing everything absolutely differently. Okay, so let's get on with the CPI ASAP so that we can actually get it over and done with. Hold on. Okay. All right. First of all, CPI. The inflation report came out 0.6% in August, which came out to be a core inflation of 0.3%. Market was actually expecting about 0.2%. So getting 0.3% is quite a little bit of a scare, because this kind of proves that we have persisting inflation coming in right now. Of course, with the 0.6% inflation month over month, we have to know where did it actually come from. So the index for gasoline was the largest contributor to the month. All item increased, accounting for over half of the increase. All right, so if gasoline prices are going up in price, effectively is contributing to most of the inflation. That's what is giving the market this sort of narrative that, okay, inflation is not that bad. Okay, inflation is not that bad. Food prices are not, persisting even higher. Apparel prices are not going higher. Furnitures are not going higher. All these different items that consumer use are not going as high as it was before. Hence, we don't have to worry as much. So that's kind of the whole entire narrative for the entire market, which is why when the CPI dropped on Wednesday, the market actually went green. I believe the market was up about, 2 to 300 points or so, which is quite surprising. But of course, the market kind of liked it simply because they think that index for gasoline being the main contributor for the whole entire CPI just means that gasoline prices will eventually go down and we'll be out of the whole entire higher inflation concern. Yeah, well, of course, a lot of shababble, but basically, if we look at this whole entire chart over here, you can see why it is a little bit concerning. Because right now, if you actually see for the past 12 months, we actually never hit 0.6% before. The highest we actually hit was 0.5% in October and January, respectively. But of course, the thing is, why this scare is coming in a little bit higher than expected is because in the past 3 months, we have already expected inflation to basically flatten down. Because in the past 3 months, we have 0.1, 0.2, 0.2 for May, June, and July. And a lot of people are expecting inflation to be basically just die off as it is. So if that were to be the case, then whatever Jerome Powell talked about, which is 2% over the long run, can actually happen if we consistently have such an inflationary trend. But of course, if you look at the whole entire chart, you can see there is a very strong level of disinflation happening until this month. But of course, we have not yet gotten a 0% inflation month over month, nor do we have any level of deflation coming into the market, which means prices are still going up for every item, effectively. So, of course, I think I'm not going to be boring you guys with the whole entire report. Basically, that's about it. That's the main crux of it. If you want to go check it out, just go over to BLS, the CPI report, check on the PDF and such. But today, I want to talk a little bit more about what is happening in the whole entire world. And I think that's quite interesting. Because historically, what happens with a lot of the central bank is that they effectively just go towards the same direction whenever they do have some form of a crisis that happens to the whole entire world as it is. So let's take 2008, for example. During the financial crisis, it actually affected the whole entire world. And when a huge recession took place all over the world, basically all these different central banks started to cut rates all the way to near zero in order to stimulate the market, for people to start borrowing money, for people to start businesses, for people to actually borrow for cheap and then actually spend the money, hoping for the economy to recover at a quicker pace. But right now we are in unprecedented times, because right now the whole entire world, effectively, we're going through the same thing, which I would like to call it post-COVID. We're going through post-COVID era, and this is unprecedented. I'm just telling you right now, okay? Because let's go through some of the data, okay? First of all, China unexpectedly cut rates by their most since 2020. So that means that China actually have their rates even lower than what they had during the pandemic itself. That means that what China is trying to say is that the economy needs more stimulating today than it needed stimulating in 2020. So that is a huge thing. Secondly, is that Europe also raised rates for their highest since 2001. So of course, if you have not checked the news out, ECB, which is European Central Bank, they actually increased their rates by 25 basis point yesterday. And when they increased the 25 basis point, basically right now they are at the highest interest rates, even higher than what we actually had pre-financial crisis. Which means before the whole thing collapsed, we are even higher than back then. Insane. Currently, the United States Feds, they're actually thinking about pausing rates for a few months. And of course, historically, it takes about 15 months of a rate pause before we start to see the first cut. But of course, honestly, nothing works for historical facts anymore. So we kind of have to see what would actually happen from here on out. So I'm not going to be holding my breath for the Federal Reserve to basically pause and hike or pause and cut. We're not sure. Australia have been pausing rates for the past 4 months and are expecting to be pausing for the 5th month as it is. Argentina actually raised their rates to a record of 118%. And that means that you want to borrow any money in Argentina, you're going to get destroyed. But of course, similarly, if you're going to be putting money into Argentina banks, if you're putting it into cash deposits and such, you are going to get a hefty rate. But of course, getting hefty rates doesn't mean anything if your currency don't mean anything. And of course, Canada paused the rates, and at the moment, they are having the same narrative as what Jerome Powell would be having as well, which is we are prepared to hike more if absolutely needed. And I think that is the general approach for a lot of central banks. So right now, basically, you're looking at the whole entire world doing completely different things. If you were to just take the United States and China for a comparison, okay, for the sake of comparison. Right now, the United States, they are actually at about 5.25% interest rates, whereas China at the moment is close to 0% interest rates. And that means that China is thinking that the economy is so horrible to the point where they need to cut their rates, and they're even thinking about cutting even more to hope that people borrow even more money and start getting back in the economy, getting back into the properties, getting back into businesses. Whereas in the United States, they are worried that the moment they talk about a possible rate cut, the middle class, the working class, the upper class, whoever it is, start to spend money like crazy. And that's what everyone is afraid of. Because other than the lower income class, everyone else is going to be spending money like crazy. The lower income class, of course, they have to spend money on food, which is an absolute necessity. But everything else is going to be affecting it even more. Working class people are going to be going on trips. The middle income classes are going to be starting to buy more cars, buy more houses. And of course, the top income people are going to be buying jets. They're going to be buying yachts. They're going to be spending copious amount of money because rates are going to be going down. And of course, that simply means that the economy is in a very scary place for the United States. So in order to curb this sort of spending, what the United States is trying to do is basically saying that we are pausing and, we don't know. We maybe want to give you yet another increase. Maybe, depending on the data set that comes out. We might hike. And that constant fear of the Federal Reserve hiking is what's stopping the consumer from spending more. Because the thing is that if you spend more and they hike, then you're going to be thinking, oh shucks, I'm going to be spending more money. If I'm going to be buying a car today, and the Federal Reserve increased the rates, I'm going to be paying more for the not really down payment. You're going to be paying more for the interest paid for the car. If you're going to be buying a house today and the Federal Reserve say that, yeah, we're going to be increasing rates yet again, then of course, then the payment for the house, the mortgage rate is going to be increasing as well. You do not want that to happen. But the moment the Federal Reserve starts to cut rates, that's when things get interesting. Because if we see the first cut, I can assure you what Jerome Powell is going to say. Yes, it's true that we're going to be cutting 25 basis point. We're going to be doing a 25 basis point cut. However, we are going to be increasing back if we see the data set. If it seems fit for us to increase the rates again, we are just trying it out. We're hoping that the economy will take it well. That sort of thing. Of course, chances are that's what Jerome Powell is going to be doing. But of course, historically, it takes 15 months for them to pause. They will pause for 15 months before they even start the cut. But again, like I said, historic, no one cares. Because we are in such a weird time zone where no one has to follow what history says. COVID has never happened before at this scale that people have written about or wrote about in the scriptures or whatnot. So we are in times that, we're in unknown times. People don't really know what's going to be happening. Who knew that COVID was this huge boom to economy when people were expecting the worst recession in 2020? But it turned out by the end of 2020, everything recovered to new heights. So yeah, we're definitely in unprecedented times. I'm going to be talking about the FOMC expectation video in the next week because we do have one more data set coming. If I'm not mistaken, it's an employment data set. I do want to look through that before I make the expectation video. But of course, like I said, currently the whole world is just in a whole different stratosphere at the moment, and it's just super duper interesting for me to go through and document this down on YouTube. But of course, in other news, if you are interested, which is the SoftBank's IPO actually came up yesterday. They came out at about $45, I believe, and they went all the way up to about $62. Today, they actually went up, right now sitting at about $64 earlier today. They actually went up all the way to $72 in the pre-market, I believe. So yeah, it's quite interesting. I'm not sure if you guys want me to talk about ARM, because the previous time I talked about ARM, my video got shadow banned a little bit, so I'm not sure if you guys want to hear a little bit more about ARM. Let me know down in the comment section, or just DM me on Instagram, and you can follow me on Instagram as well. I'm going to be posting that basically every single day about the markets, about memes about the market, of course about my personal life if you're into that. But anyway, thank you guys so much for watching, and I'll see you guys in the next one. Peace out. Bye.